Hey guys, how's it going? Welcome to the London session recap for Eurodollar on Wednesday, the 10th of August 2022. Apologies for the slightly poorer audio quality, as I still don't trust my usual microphone to record the audio properly, so I'm currently just using my headphones, so do bear with me. Daily chart, obviously bearish. We are currently in the pullback phase. We haven't pulled back and mitigated any significant supply on the daily chart, right? We haven't pulled up to the EQ. So, my bias would still be that we're more likely to have that deeper pullback. We have swept liquidity, but other than that, there's not really too much going on here to suggest we'll be ready to roll over. So this is where we then can use the lower timeframes to give us a bit of a clearer understanding of what potentially may be going on. So 4-hour chart, in this big swing range too, we have pulled back up above the EQ, so we have pulled back to premium prices, which can increase the probability that the 4-hour swing pullback is potentially finishing and ready to take out that 4-hour swing low. However, similar to the daily, it has not mitigated really any significant 4-hour supply. Also, sort of the main guide that we use to signal that swing pullbacks are starting or ending is that larger internal structure. And as we can see, that is still very much bullish on the 4-hour chart, where we had that last bullish large IBOS there to the upside. We've pulled back, and now the expectation is this strong internal low is going to hold, and we're going to go on to take out that weak high. What gave us even more confirmation of that was the smaller internal structure from within there. Okay, where we can see price came down, pulled back, and then it held this low, and then we got that small bullish IBOS in there, right, where that shifted bullish. We've come into this strong green low, and that expectation is that we're going to, everything's aligned in terms of the 4-hour internal structure, and we're going to come out to take out that weak high there. Okay, so again, internal structure is bullish. The internal structure within the internal structure has also shifted bullish. We've come into that low, and the expectation is for this high to be run and potentially push up higher. Now, that would be sort of, the overarching, arching, or sort of my main forecast, but we do have to be aware, ultimately we are in pretty, range-bound conditions. There is 4-hour supply here. Yes, it's a weak 4-hour internal high that, I do expect to be broken, but that doesn't mean that, we still have to take into account that this is supply and we could still have a bit of a deeper move. Anything can happen from here. Like, the overall bigger picture is still heavily bearish. So, you still have to, all I'm trying to say is you have to bear that bearish confluence in mind when looking for positions and act accordingly. But the ultimate expectation is for price to break this high and then take that overall larger high there. Okay, you can obviously draw on your the sort of order flow to supply and demand ranges that we use, right, if that helps you visualize it. So we had that initial bullish range form, right, when price initially had that bullish IBOS, and price then pulled back into mitigate the prior range, right, to then continue to the upside. So this is where then you can draw on that next range. Okay, and we can see this is the current demand range that we're within, this current internal demand range. And then from within that, even more so, you have this smaller range as well, which is saying, right, when we broke there to the upside. So initially, draw on the bearish one, you can see how we had that small bearish order flow to facilitate that larger internal pullback. There we go, right? So, right, we had that bearish order flow to facilitate that pullback, and then it shifted bullish. So now we've come in to mitigate that demand range, and that's what we're expecting these demand ranges to hold until it takes out that high, right? That's essentially what we are running with here. So if we jump down to the 15-minute chart, I've brought this back on bar replay to just before sort of the London session at Frankfurt Open. So I have the M15 mapped as bearish. We've gone through this pretty much all week, so I'm not going to go too deep into this. The structure is reasonably complex, right? There's kind of internal structure with the internal structure. Kind of the simplest I can keep it for you is we had this bullish break here, right, of this M15 internal structure, which is essentially that 4-hour structure we were just looking at as well, that small 4-hour structure. We pulled back into this strong low, and expectation would be that this weak high is going to go right. It's essentially that small 4-hour internal structure. That's what we're looking at from within there. Then we can zoom in a little bit, and we can see to facilitate that move to potentially take out that weak 4-hour internal high and that weak M15 high, we have these bullish ranges here, right? And really that's kind of what we've been zooming into this week and using for our more immediate bias, because they are big enough in terms of pips, right, for us to actually zoom in and trade within just to catch those like session moves, right? Those intra-session moves where we're just trying to catch those short-term day trades and we're not trying to kind of swing for the fences. So yesterday we know that we had that bullish IBOS here that led to that breaker structure to the upside, which then gives us our new small, I guess, whatever you want to call it, M15 internal range, right? This is the internal range that we're working within. So the expectation is that this low will hold, we'll pull back into here, potentially mitigate this unmitigated extreme demand level, and then continue up to take out that weak high, right? That would be sort of the most probable scenario based on pretty much all internal structure being aligned bullish. Main negative bearish confluence factor is we are coming off this extreme M15 supply level, nested within that 4-hour supply level as well. We obviously swept a lot of liquidity and sold off, reasonably aggressively. And obviously the much bigger overall higher time frame picture is bearish. So we do have to be aware that, that could start to sell off at any point. So not the most ideal conditions in the world, right? It's not overly bullish, but the expectation with the current internal structure that we have is more to the upside than to the downside. So kind of when you come to a desk like this, these are the two main POIs that you saw me annotate and draw labels towards in the pre-session analysis. There is stuff within here, but really these are going to be the highest probability. Why? Because, well, the long is really what we want to be focusing on if you want to trade this, because, well, all the reasons I've just explained, right? The expectation is price is going to come into this low and continue to the upside. We have a nice POI here, which is the extreme of this reaction leg, right? Reacted to supply, failed to put in a lower low clearly, and then broke structure to the upside, where we can see a ton of momentum came in and led to that bullish IBOS. It also mitigated the prior demand zones below, right? So you had that series of mitigations, then you had the flip. So basically what that means is this is the unmitigated extreme, right? There's nothing below this that is unmitigated. Okay, price obviously could come down and it could, mitigate something within these wicks or some of these slightly mitigated zones. And of course that could happen, but typically when that happens, I don't really like it because these zones, let's say, aren't as strong because some of the orders have already been filled. So when that happens, not always, but typically I prefer to at least see an M15 chock, right, to then give us a fresh, unmitigated M15 pivot demand zone, right? And that's one of those sort of situations in which I would wait for an M15 chock. But when you have the unmitigated extreme, which would be this case, right, this is going to be sort of the most high probable zone if you're looking for longs in this scenario. What we also have is nice, perfect equal lows being built, right? This low failed to sweep this low here, which means we're building a decent amount of sell side liquidity there. This is where I would have considered shorts if we had have come up here during the session before we'd broken and taken these lows, right? Because essentially what you have, I'll draw this on, is the bearish order flow, right? So kind of draw this on a little bit and just paint the story back a little bit here. Like we can even go all the way down to here, right? If you want to draw this all on, if it kind of helps you like visualize a little bit more, what's going on here. We essentially have that bullish order flow. Okay, trying to draw this as quickly as possible. You guys can whack me on 2x speed here if it helps. Cool, right? And then the current range we're within is this range here, right? So this is the range, the bullish range that we expect to hold. Price is currently pulling back into mitigator. But to do that, what we've had that bearish internal breaker structure here. So essentially, you have this bearish order flow. So this is why, I would consider shorts, because basically what we're looking for is for potentially that bearish order flow to kick in, right? We pull up once more into mitigate this range where we have that supply zone to then get another leg down into this level, and then we can look for the longs. So that's the scenario in which potentially would consider shorts, just having that pullback and then looking to get down. And that's another reason why I know some of you looking for longs from within here, which I can see them, I can understand some logic behind it, but I just do not view those as high probability whatsoever, especially with the current market conditions and the whole narrative that we built up until this point. But yeah, this is where we had that flip, right? Reacted from demand from within here, failed to put in a higher high, and then pushed down. It swept liquidity and mitigated this essential supply chain, right? So this zone made a lot of sense, but it's understanding the narrative of why we're playing the zone. It's not just the zone itself, but it's the overall structure, right? Essentially looking for that to continue and then take out those lows and then look for the long. But if we come down first, right, take out that low, then this can become the protected high. And then from here, these reactions are typically just going to be a pullback into this level, right? And then we'd expect those bullish ranges to continue until we move up to the upside, okay? So it's all about understanding what price looks like when it gets there, rather than just going, okay, here's a flip zone that led to a boss. I'm just going to trade any M1 entry order that comes from within here. It all depends on the story and the narrative of what's happened by the time prices got there, right? And that goes for anything. And I think sometimes, like, it's understandable, right? I get it, but like, I kind of see some of you, like, you'll draw on your zones and stuff, and you understand that it's a demand zone, and yes, it broke like these highs and whatever, but that doesn't necessarily mean it's a POI in which you want to trade from, right? It might be a zone, but it's not an actual point of interest in which you want to start be looking from, because like I'll draw on POIs that I'm aware of, but it's just purely information. It's more like I know that there's demand here that caused the move, and I'll keep it reined in because it's not a zone that I really want to trade from. It's just I'm aware of it, and it's useful information to help build a narrative with how price develops. But sometimes I think maybe for some of you it's better if you don't even draw those on, only stick to having these ones drawn on, because then you can get lost during the session as price starts moving. Price starts coming in here and you're looking at the M1, and then maybe you just see a nice big like M1 reaction candles, volumes kicking in, and then you can suddenly convince yourself, oh, this is where I want to get in, and blah blah blah, and it's not so good. So it's not to say that like getting long from this POI would have been the worst in the world. Like I can see that there was a bullish chock, right, and it easily could have done that and continued from the upside. But yeah, with these market conditions, with the overall, not even sort of conditions, but just the overall picture, the overall narrative of where we are, like, hopefully you can see why, and like I've tried to put my analysis, the pre-session analysis, these are the two high probable ones. This one, the short, only if like we get the initial pullback into it, and then we can look for that move. But even then I would still be cautious, right? This is the EQ of this leg. Right, we've already pulled back below it. We're expecting potentially that high low to go, so even shorting against that wouldn't be ideal, right? This is the zone of anything I'm going to be looking for the session, and really that's all I have my eye on, at all, if anything. So, and especially because we had these equal lows. Like if this low here had a swept and then done that, okay, now this makes a ton more sense to be looking for longs from within here. But when you got, like, I know I say react to liquidity rather than predict, but in this scenario, like when you have this, and I'm just viewing that as essentially that pullback into here, right, it makes me very, very skeptical of wanting to trade from this. So if you took a look from there, it's it's not the world. It's just, I guess in this situation, I was willing to miss that move. If it came into here and it went from without me, then I was happy with that. Just because I don't love where we are within price action. We're coming off this level. I'm not trying to force it at the moment during August. I'm trying to be a bit more selective and just wait for those clear standout moves. This for me, with that build up liquidity, if price comes into here, like that's okay. Now I'm ready to risk my capital. Okay. So price is moving along, right? And you can start to, this is when you can draw on all these POIs if you want. You can see what's happening, right? So you can start to sort of see the supply chain. For me, this is all just quite tight price action on which I wouldn't want to trade, like, especially at this point. And you can see all this, right? Because obviously we did chock up here, but then we've chopped back down, and then we've had another little breaker structure here, right? You can start to see that bearish order flow start to kick in with momentum. Like I'm thinking these lows are going to go. So yes, there is a demand zone here. But even if you get long from within, you're like trading right into this. That to me doesn't stand out to me as somewhere I personally really getting excited about trying to get long from and looking to trade, right? This is just all pointing as signs to the downside. I could have been wrong, but like that's, like I said, it comes down to where you want to trade. So then when you start to see price pushing away, like I don't really care because, I know I'm not interested in getting in the middle of this range, right? This is a tiny, like 10 pip range during London. Like that's just nothing really going on there for me. So then we see, okay, now, right, that supply holds, we can see that supply chain holding, and now we're starting to take out these lows. So this becomes an area in which I'm happy to get long. Now, some of you might want to wait for a bit more confidence. You might want to wait for the M15 shock here first, right? And some of you might want to wait for like a clear break of these highs and then looking to get in, right? And looking for more confirmation. But obviously, when you're dealing with such a tight range, you may not always get into that move. So this point, this is when the alerts go off, and then this is where I'm happy to start to look for a potential entry. So I'm just going to bring it back a few candles, right, as we come in. So at this point, obviously I had the big liquidation. You can even look at these more recent M1 lows here. Now I would have preferred if price had a push deeper into the zone, right, to pick up more orders and maybe hit a refined M1 level within here, right down here. But of course it doesn't have to. So big wick reaction, which shows you big orders being filled in. So that is a good sign in terms of looking for longs and showing you that, like, that there is an overwhelming imbalance between supply and demand here. The M1 shock on this data feed, it might have been a bit tight on others because it's literally to the pip. But because this low here where my candle is, the inside bar, failed to break the previous candle's low, right? The 906 candle failed to break the lows of the 905. That means we've had that fractal pullback, which means this is the current fractal high. So as you guys know, that's the bare minimum I need to see for my entry model. Once we get the mitigation, I need to see a choke on my entry time frame, okay? So then we get the choke at this point, okay? But we failed to break above. It's all looking a little bit messy. So we had the liquidation, we've had the mitigation. Arguably it's a V shape. It's not the most amazing in the world, but there's at least some momentum coming in. But at this point, this is just where I'm a little bit skeptical, especially with the overall hard time frames. Like I'm just not in love with everything at the moment. But in terms of demand, like there was nothing that's super clear to me because, well, what do you technically need for demand? You need a candle that is then the next candle closes above its high, right? And we just about had that when this candle here closes above these two candles highs. So now you've got quite a big demand zone here. So, on paper, technically, this is an entry zone, but I just didn't really see what enough. I just wasn't convinced. Is what I'm trying to get at here. But there was just showing you kind of what I mean here. There's the supply range as well. I kind of just wasn't sure like with this was just going to continue to roll over. Basically, we come into here. It's not the most convincing, and we're going to keep going down, right? So I kind of wanted to see this cleared out or just something a little bit more clear cut. And like if this candle had a clearly closed above and we had a nice clean M1 demand zone, it's just with the big wicks and nothing really closing. It just looked messy to me. So I just wanted to see a bit more. But yeah, you could have definitely entered from within this wick or from top to pivot, however you want to enter. All right, and that would be a valid trade. It's just a little bit aggressive, so it's just chopping along. Then we see a bit more momentum. So this is kind of like I can't get my words out today. A bit of a better sign, right? You can start to see sort of these breaks of structure. And now you've got a bit more to work with, right? Potentially you want to look at here, but even then it's like, are you going to take this zone or are you going to take this zone? I still wasn't really sure where we wanted to enter. And then we're coming into this M1 supply level, right? So this is where I'm kind of just, I'm not totally convinced. Okay, now we push up. Okay, now I'm like, okay, right, I think we're going up now, definitely. Right, we've broken these highs here. So this is where we have the, right, pull into supply, we have the reaction that just about sweeps the low of this candle, right, and then pushes up. So we have a sweep a flip that sweeps liquidity. So yeah, this is definitely a trade you could then look to take. Yes, there is the risk that price could then come down, right, and mitigate this unmitigated level. But when you kind of see everything you see, then we start breaking structure to the upside. What I typically like, if you're kind of entering, let's say, slightly further up in the leg, is at this point, you kind of price comes down, tags you in, and then goes. That's kind of, if I'm going to take these kind of trades where I'm not getting in down here, that's kind of what I prefer to happen, because otherwise what can happen is price can come up, it like mitigates this level, structure, like the larger structure stays intact like this, right? And then you're trying to trade against that, and that's typically when you can take losses and then we get another drive down. So yeah, at this point, you could set your order. The other thing I was going to say as well before I forget is like, yes, there's an unmitigated pivot, but this range has been mitigated already. So this is kind of how you can see it's unlikely that price, after mitigating that range, is going to come back down to, say, a refined level. It's more likely to come into this range and then continue, right? So you could set your order here, but then what ends up happening is we come into this extreme here, which is essentially like clear M5 supply there as well. And this high was where the M15 choke level was. I'm just going to jump up to the M15 now and show you. Okay, here. So obviously there's the other risk as well, which is also I didn't like, is you still got this M15 supply here, right? Because it caused the break of those lows. It easily could just do something like this, right? But I guess one thing I've kind of just subconsciously saw as well with the sweep, big sweep of liquidity, come into a strong zone, but also these highs, they failed to cause price to break below, right? So technically didn't actually get the IBOS. So that's another reason why these highs could be weak. So if we get that choke now, right, it's very likely this is just building that buy side liquidity to target here and potentially higher. Okay, so when we then drop down to the M1, like some of you might be happy to trade against this, but this is where I was then just, well, I don't think I had an order on at this point. I didn't actually set an order on this, but I wasn't quick enough. By the time I was even considering it, price was already rejecting this. That's why I didn't set an order here. Just explaining that would be a valid potential entry if you like that. All right, now this is when I really like it, because we have the bullish M15 choke. So M15 supply is clearly failing, like we're clearly taking in control, like a ton of momentum coming in. This is where we're just trying to kind of catch that London session momentum. Now at this point, again, where are we going to enter? It's not super clear, but I liked this because this was the reaction to supply, right? It pushed down and we had this movement up. So anywhere from the top of the reaction, right? So the base of the reaction is your supply to demand flip. So you can technically enter anywhere within the zone. That's quite a large zone. Risk reward is not in my favor really now because the supply, M15 supply is getting quite near, right? So obviously going to want to refine that a little bit. So that's where I refined it down to this candle. Now it would have been more ideal if this had a swept, but you're not always going to get the picture perfect entry model. What I did like though is it kind of mitigated this demand range here. So then at this point, this is where I set the order to get long here, definitely to get long. And then it pulled back, mitigated the decisional. So yeah, there's an entry from within there. If you're super aggressive and you say like the 5 second or something, but not something that meets my plan, right? And then it ended up just going. And at this point, I'd cancelled my order. Just when I started to see it going away, because like I don't really want price coming all the way down here, because this is kind of in the middle of the leg now, and I kind of need to reassess what's going on. I wouldn't really want to leave my order. But an even sort of better reason to cancel the order is then when actually the M15 supply is mitigated, and then this is where I'm not looking to get long anymore. I'm just waiting to see how price then resets. And not looking to trade through it. So now we've had a failed reaction from that supply level. So some of you a bit more aggressive, you could look to definitely get long from within here, right? Because we've had that failed reaction to supply, right? So price has come into the M15 supply. We've reacted, failed to put a lower low, and then broken and closed above the reaction. So now anywhere from the top of the reaction to the base of the reaction, that is your supply to demand. So anywhere between those two orange lines technically is demand in which you could look to get long, as that gives us our first indication or solid indication that this supply zone is going to fail. But it hasn't failed yet, right? It does not fail. The zone doesn't fail until price trades up above it. So there's always the potential that there could be enough orders, like this was just a move. Okay, a better way of explaining it, right, is we have the failed reaction, which then gives us the flip, which is a good sign that potentially you could look for longs to go through. But the risk with those failed reactions is that could just be a liquidation to push deeper into the zone to pick up more sell orders, right, to then push down. So that's why you don't really have true confirmation, and it's better that you get the flip, right? So price reacts, pushes down, pushes up, and causes the zone to fail, and then comes back in, right? Because then you know that supply has been cleared out, and that would be a much higher probability M15 flip to play. But yeah, in all intents and purposes, with everything we're seeing here, with the bullish order flow, we've come down into the unmitigated extreme. We've swept all of this liquidity, aggressive V-shaped reaction. Right, we come into here. It's probably more likely than not we're going to continue up. But yeah, it's out of session for me. This for me is not the type of area in which I'm too bothered to try and get in. We've got CPI coming up as well in a few hours, which will sort of be a big risk event. So yeah, it is what it is. Would have been nice to catch that move. Could have probably got a decent tenor up towards that level. But yeah, also for those of you who do take or are still considering M15 entries, like I try and preach this as often as possible. Something like this is just a very simple trade. Look to target there, you've got over 5R there, 6.5 there up to the week internal high. Even if you wanted a bit of a quicker move, right, you've got over 3R there to that level. Let's have a quick look on the M1 and see if there's any interesting entries here on that M15 flip. Yeah, not really. So you've got this being that extreme M1 zone, which isn't great because this M1 zone failed to break any structure in the leg. But you can see there's essentially it is a flip, right? And then you could either take that whole range, right, or refine it to the actual candle, unmitigated candle here. I'm going to redraw up. You guys get to see what I'm getting on. It's not really an entry that I would personally take, but you can see the risk entry from within there. I'd probably prefer price to give me an M1C, like come in, react from that level, then give that, and then try and get away. Or potentially you could use seconds if that's within your plan, because I just obviously would be cautious with risk entries when you have the unmitigated extreme below. But yeah, you can see that right reacts to supply. Getting a bit advanced here and trying to force an entry, but it definitely makes sense as to why it's continuing up from there. Just not something I'm personally too bothered about. But the main lessons, as always, I want you guys to take away from this is trying to just really understand where the high probability levels are going to be. Right, it's not just the M1 entry model reacting from an M15 demand or supply zone. It's the right ones in which we want to be trading when everything is aligned. And this is a level rather than kind of trying to get caught up with this move, like these movements from within here. And I see people trying to short from within here, or they're trying to buy against that's being mitigated in here. Like you're just forcing it, in my opinion. I mean, this one, I can see the logic behind this because there was a bullish chalk. Potentially there's the demand chain forming, right? And it could have done that and continued up. So yeah, I can see a lot more logic behind that. But just yeah, not something I personally saw as worth the risk when we're essentially having that mitigation into this level, building those perfect equals. I think it just makes a lot more sense to wait for those clean and much more obvious trades. Like, these are the ones for me that just they slap me in the face, right? You know when price hits this level, right? You have that confidence. This is the time to be looking for entries. This is the sort of area you just stay out. This is what we say, right? Stay out in the middle, stick to the extremes. This is exactly what we mean. Um, yeah, as always, if you have any sort of specific questions about this, fire them in the Discord, see if we can help. But yeah, I hope you guys took some value from that. And let's see if the CPI can potentially drag us out of this range. But yeah, going back to the 4 hour chart, just kind of trying to apply that mechanical framework. I do think it's much more likely that this 4 hour high will be broken. We're building some nice perfect equals, so we'll see if we can potentially break that. Probably expect some reaction from this level, but if we get a 4 hour close above, what will that give us? That'll give us that another next little internal range. So potentially that could just be to sell off to come into here before we actually take the high, or maybe we will just blast up from here and go. That will remain to be seen. Yeah, I'm not in love with things as they stand, but I do think it's more likely to go to the upside than not. But CPI could just, who knows what's going to happen at the moment. With all of that. So I definitely won't be trading until London tomorrow because I don't trade New York at the moment. But yeah, if it's super volatile and messy after the news at 1:30, I'd recommend you probably wait until the next session just for the dust to settle and for things to calm down a little bit. If it's looking messy, just let structure develop. So I'm rambling now, so I'll leave that there. Hope you guys took some value from that, and I'll see you in the next one. Cheers, guys.